Oh. Wow, pretty interesting. I just good morning, everybody. Sorry about that. I was looking at a number. My apologies. I was looking. I had to update the video from yesterday, the aftermarket recap. It still said morning note. Sometimes I don't change the logo. I don't change the name or the title. Sometimes I just forget because I'm so engaged in trying to do the video that it happens. And then I looked at the live videos, 743 episodes or videos of the morning note and even market recap. Wow, that's a lot of videos. Pretty cool. I'm glad that you guys have joined me the whole way. If you have, thank you so much. It's been an absolute kind of a blast going through it with you guys. But yeah, wow. Let's see if we get to 1,000. Why not? Anyways, good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. It is Thursday, May 19th, 2022. Let's go ahead and get started. Bottom right hand corner of your screen, white logo. Click on that, turn on notifications, subscribe to our channel right there to your right. Or maybe it's this way. This way. This way, this way. There you go, that way. So anyways, good morning. Let's go ahead and talk about it. The Dow is down 344 points. NASDAQ down 107. S&P down 1.06%. Russell down 0.90%. Crude oil, China lockdowns, obviously growth concerns, down 3%, 103.96. Gasoline down 3.5%. 3.57 per $3.57 a gallon. Gold futures are up 1.22%, 1838 an ounce. Silver up 1%. Again, the flight to safety. Look at yields. TNX falling 2.778%. The dollar is sinking today, down 0.73%. You would think that would give some reprieve to stocks, right? Kind of helps a little bit of the backdrop. Lower rates, lower dollar, maybe. The VIX up 3.5%. We did fill this gap. I talked about this on the blog and I talked about this on Twitter. Again, I can't say that technical analysis on a non-tradable index is the best thing in the world, but again, it kind of gives you a roadmap. And so far, it's a good way to see things. So you can see the nice spike in volatility. We filled that gap. Now we're testing that gap fill again. Let's see if we break down below. There's 31.15, possibly 30.90, the 200 day. Let's see if we get there. And I don't know what that is. Anyways, my apologies. So that's where we are this morning in terms of VIX. Could we get some more pressure to the downside, maybe bounce back stocks? That really depends. Let's take a look at S&P overnight. S&P overnight tapped those lows, 38.60, right? Tapping those lows. Now the question is, do we get a bounce here? Well, let's go ahead and start kind of looking at some charts and seeing where we are. Forget about the inverse head and shoulders now. Now you're at a point where, well, that's over with. So you're not going to get a regular head and shoulders either. You just got a complete meltdown. We talked about this yesterday, where it's just taking risk off the books. It's almost like you really can't fight the Fed. The Fed said, we're going to get lower prices. We're going to kill inflation. That's what we're going to do. And they're getting what they want. So the question is, really, as an investor today, are you willing to wait it out? Are you willing to wait it out? I mean, are you closer to the bottom? How much pain can you take? That's a tolerance, right? The idea is investments and trading are two different things. But let's go ahead and expand on this. Let's go to the last 20 years. And you can see this nice channel from the COVID bottom. Let's go ahead and kind of switch it up a little bit. Let's go ahead and add a little longer of a trend line. So if I did the trend line from, let's go ahead and expand this weekly. Again, you still have a lot. Look at that big movement, right? If we just did 2008 and we kind of did a trend line from the bottom here, right? Let's say we take this out, we just go straight up here. We just go from the 2016 fall, or we can do the 2018 fall, the 2020 low, either way. If you did that trend line here, you're probably 2,400. Now, that's probably really bad to think about, right? Probably highly unlikely to get there. So if we just kind of expand our view and see that, look, we have this channel that's broken. We'll take that out. Yesterday's facts and today's facts have changed, or the view has changed. Now the question is, do we have any kind of pattern that we can kind of look at? Well, we do have some Fibonacci levels, right? That kind of gives us a little bit of leeway, 36.64. So what I've been doing is kind of matching valuations, Not looking at stocks in terms of what their previous price action was, but in terms of when will it be to the point of at least interesting to investors. Because at the end of the day, we're buying stocks with the idea that they'll gain in value based on future cash flows or current cash flows and what someone else is willing to pay. That's basically why you're buying assets. Is someone else willing to pay more than what you paid? So the question is, at this level, ask yourself today, are you interested in buying stocks today? Probably not. I mean, I know I'm not, just for the simple fact that I think we're just a little smidge above expensive. 37.50 is my target. Again, that gives us a 17 PE. 38.25 is my next support level down. 36.64 is a very big Fibonacci level. I don't think we get there, but 37.50 is my target based on PEs. Now, the assumption is without a recession. That's a big key. You have to ask yourself, do you think you're going to get a recession or not? Remember, recession is two consecutive negative GDP quarters. That's the key. So you have to look at it that way. Which side are you on? Which are you looking at? Now, again, you don't have to make a decision today. In terms of being a trader today, here's the tough part. Put premiums. IVs are so expensive. Nick did a video yesterday on it. They were very expensive. I was looking at this flush down at 4,000. SPY puts for the 395, just $5 away for Friday. We're $6 per. So again, the premiums are getting juiced. Again, they're selling insurance on a burning house where everyone wants to buy. Now the question is, as we open and get a little more liquidity into the market, the question is, do we hold this double bottom? Could it? Well, we haven't really held many bottoms lately because we've just been continuing grinding down. But does it give us an opportunity? Well, let's say you're looking at a possible bounce today. Well, the high of the bounce overnight was 39.30, but I'm still going to try to use this neckline as a way to kind of guide me. 39.50. Below 38.55, that's pretty much the ball game in terms of short-term support. Now it's really where we're going to go from there on the daily. And if we go to a 2-year chart, 38.25 seems to be about right. So let's see if we break 38.52 and they get down to 382.50. Now, in order to buy puts, you really have to go out of the money here, guys, because that's the only way you're going to see if you can make something because they're so expensive near the money. If that's the case, what would be the play? Maybe the 380 puts. Again, take a look at volume. But again, we need a breakdown. We need something, continuation, something to get us there that's risk reward friendly. So the question is, do we hold support? Well, the backdrop is getting at least a little more positive as you're seeing a slight little bounce because yields are falling. Let's take a look at 10-year yields. Take a look at that. Nice fall. If we go and bring up the daily, started seeing a little bit of a rollover. Not quite there yet on a daily, but interesting that we do have the 50-day there. I still think that bonds roll over. I think bonds get bid. I do own TLT. I did buy with Investment Club. We are bouncing, which is a good sign. Does pay a nice dividend yield. 119 is a very, very key level of resistance. We tapped it twice. Do we break it? Watch bonds today. Bonds get bid. Then you're going to start seeing rotation into the safer investments, which at least is better than just a complete liquidation of all assets, is basically what we had yesterday, other than gold. That was basically it. You had that in 2020. You didn't have that as much in 2018, but you had it in 2008, where it was just a complete red panic. Just get me out. Sell it at a market order and get me out. And that's fine. Kind of like how Ackman did with Netflix. And sometimes if you want to hold the stock, that's up to you. If you don't, that's fine. I haven't really sold really much, nothing. Looking at Bitcoin too. Bitcoin is stabilizing up 1.5%. What is Bitcoin telling us? Maybe peak inflation? There is a gap to fill right here, guys, at 35.53. I don't want anyone talking about being too bullish on Bitcoin until we fill that gap. That's why I'm looking at. So I'm holding. Nothing has changed. Now, that's where we are this morning. A lot of research I did this morning looking at this stuff. But again, valuations, guys, they matter. What you pay for something matters. Understand that. A Lambo is a Lambo. But again, a Lambo is different when you pay 100K for it versus 500K. Remember that. Good morning. Thoughts on Cisco post earnings? I think Cisco was just, here's what I'm noticing from these companies. Interesting enough. Imagine you're a CEO of Target, Cisco, Walmart. You just got your numbers, right? Margins are getting thin, already razor thin, especially on groceries and everything like that. So again, margins are thin. You're seeing a change in terms of what COVID was in retail to now. more foot traffic possibly in comparison to delivery. Maybe people are trading down to private labels in terms of Lowe's conference call, and so was Target's. So if you already have bad news, might as well just throw it out there. Apple was the king of this. They always lowered guidance. Nike did this about last year, if you guys remember. When I talked about Nike, I said they always do this. And then their Christmas holiday, Q4 was gangbusters. So a lot of companies right now are pivoting to the point of, hey, if the market is going down, hey, let's kind of give it a, just say what we're afraid of. Just put it all out there. Throw it all out there and say, here's our typical headwinds. The last thing a company wants to do is under deliver, and over promise. If I'm a company, if I'm a publicly traded company, I'd rather under promise, over deliver. So again, Cisco, I read some of their earnings. Again, it wasn't too terrible. But again, in this market, guys, we talked about this with Apple and Microsoft and Tesla. Unless you're absolutely crushing the number, you're not going to get rewarded in this market. It's just unfortunate. Unless you get straight A's on your report card, no pizza party for you. Let's say it that way. Huge amount of SPY and IWM puts by in the past 2 days, still going down. Tesla's going to Sun and Baba saying because super undervalued now. Yes, there's a lot of value out there, but again, it depends on the beholder. Again, if you think it's a value today and it dips a little more, but it does bounce in the future, it's kind of hard to test that value or to kind of look into the lens of when you see value. Kind of think of it as a survey. If you buy a stock today, do you think in 3 months people want to buy it at a higher price, or 6 months, or 7 months? That's kind of the idea you have to have. Now, remember, options are just like insurance. A lot of people bought put options, but they're very expensive. And again, those are hedges for people who don't want to sell their stock, or maybe they're just doing naked puts. That's either way. There was a ton of put buying. I saw a lot of call buying as well just this week. So it's just been back and forth, back and forth. And the really thing that, if you want to give it a culprit, I don't like to give excuses, but more of explanations. Liquidity is pretty dry out there, guys. Not a lot of liquidity on S&P futures. Volume isn't that great. So again, kind of a slow incremental meltdown. That's what we're getting. Not getting a lot of panic. VIX are not showing me panic. Oh my God, the world's ending. But look at VIX kind of retesting that gap fill. We talked about that just a couple minutes ago. So maybe do we get down to 30, 39? Now, again, I've been saying that I think we're going to go here and I think we're going to go there. Obviously, any kind of explanation I can or any kind of forecasting I can. I thought we would get, well, the Head and Shoulders did accomplish what it had to do. It was just a small move of this here. You can see this kind of come down and hold this level here of 38.90. Let's see if we can kind of get above 39.32, but my target would be 39.50. Let's see if we can get at least retest the neckline, kind of give us a little bit of a breather after yesterday's move. A snapback rally today or a little bit of a short covering rally usually happens after these kind of big days. During COVID, 2008, 2007, you name it, it's happened. So don't be surprised if we do bounce today. I wouldn't say very furiously unless we have some really great news. But other than that, again, I expect not much today. Now, again, for all I know, we could continue to swan dive over to 37.50. That could definitely happen. But at the end of the day here, I think the sellers kind of gave it a little bit of room. And some other news that came in today was that unemployment claims came as highest number since January. So a little bit of a reprieve for the labor market. Again, that's very deflationary. Let's take a look here. Good morning. Thoughts on VIX getting near 60? Yeah, I saw that. There were some put spreads or some call spreads on VIX buying 60. We've heard of the 50-cent trader. We've heard of that. Definitely a possibility. But I mean, all we did was really fill that gap on right here. You can see it. And we're kind of coming back down. If that's a good insurance policy, fine. If that's your thing, I think SPY puts are the way to go. They're just a little expensive. You're going to pay for that insurance, man. You're basically buying car insurance for your 16-year-old speed demon in a Hellcat car. That's the price you're paying for this stuff. So I don't think we get to 60. I think 40 seems to be that resistance because we're not getting that panic, guys. It's just, I don't see it unless you're expecting some kind of black swan event where Russia invades Germany or China invades Taiwan. Fine. Again, that's not a bad play. But could we get there? Possibly. I don't know. I don't think so. I lean to more that's probably not going to happen. I think 36 is where we've kind of been hovering around since December. So unless we're expecting something crazy, I don't. We'll see where we go from there. Hey, Carlos, can you explain liquidity in layman terms? Liquidity is just basically how many people are buying stuff. The ease at with goods and services can be bought with money. That's it. Liquidity. Kind of think of it the velocity of money. There's just not enough money out there for people to trade. People are getting to the point, at least in the future side and the volume side, they're just like, I'm gonna take a breath. I'm gonna breathe. I'm not gonna try to test this market. I'm not gonna trade it. Let's see what happens. A lot of traders are going that. Again, look at the trading volumes from 2021 to now, to 2020 and now. Completely different. You're talking about almost half of those trading volumes. Now, again, those bid ask spreads get a little wonky, but again, you're getting a market that's really very, very sensitive and fidgety. It wants any reason to sell, and you better have a good reason to buy at this. Now, again, we're still in a downtrend. So again, anytime you get a pop, it's an opportunity to offload some stuff that you don't want. That's really the only thing. Calls are still relatively cheap against the market. You're getting the most value out of calls because you're playing a bounce. But if you're playing puts, it's just really expensive. And look at Cisco kind of bouncing back a little bit. Let's see. Cisco hasn't really done much since the dot-com bubble, honestly. A good company, pays a dividend, but not much in terms of innovation. But that's exactly how liquidity works. If you don't have buyers and you don't have sellers, inventory gets stayed on the shelves. That's basically it. You get stuck. And that's what dry liquidity means. Now, could we get a little bit of bounce during the summer? Sure. Listen, regardless of what happens today, tomorrow, I'm here with you guys every morning and afternoon to explain it to you guys. So again, you have to be exposed to these kind of environments, guys, to make yourself a well-rounded trader. This kind of environment, Fed-induced, reminds me of 2018. In terms of inflationary, we had some inflation in 2009 that I remember. The company was not open as of yet. I was still kind of researching markets at that time. But yeah, I've seen this stuff before. I can't say in terms of the velocity. Again, there's a lot more players in the market now than there was in 2009 with the advent of the internet. You have your Reddit boards, you have YouTube, people explaining things, Instagram. It's a different game. It's a different reality, a different market. So the most important thing is that you just have to adapt and adjust. So I'll do my best to explain to help you adapt and adjust. But thank you. Yeah, my sneakers. I appreciate it. Yes, I do wear all of them. I do wear them all. I love them. Have a great rest of your morning. We'll catch you guys later for the aftermarket recap, and we'll see you soon. Cheers.